Good afternoon, everyone. Just before noon, actually, out here in California. This is a quick little update on gold. Gold is holding up again like this, very similar to this type of a pattern. Within this little flagging range, we need to see it try to move higher to confirm this potential bottom here. So understand that what we're looking at is very similar to this type of action right now. Looks like kind of a moderate rotation. And we're getting that same type of rotation right here off of the flagging pattern. We need to see this flag actually change direction and break. Gold is holding up, which, to me looks good. Now, if we come back over here and look at silver, shrink this down a bit and try to expand this out. Let me just do it this way. And we'll switch this to silver. Should pick up all my lines. Nope. Okay, so let's undo. And here's silver on a 1 hour basis. You can see that we continue to move downwards. So let's see where the peak was back over here. Here's our breakdown, our flagging formation, our breakdown into consolidation. This is the consolidation range here. And then we go through a series of pullbacks, flag extension, pullback, flag extension, down to this low. So we're really looking at, and again, multiple flag extensions here. And this is, again, carrying downward into the lows. So this is our number one up here. Let me move this out of the way. Our number one pattern. Oops. Our number two. And again, these excess phase peak patterns, as you've heard me say over and over again, if I were to teach one thing, it'd be these excess phase peak patterns, because they happen repetitively in the market. And if you understand what they are, then you're really looking at a pretty clean understanding of the entire phase of the market. And they work on any time frame, they work on any symbol. Really, what you look for is this rally up to a peak, and then you start looking for the flagging. If you can't see the flagging very well, then start looking for consolidation and go back between the peak and this consolidation. You should be able to find some flagging. Okay, so now where we're at right now is we've got this downward cycle trend. This is moving down to the ultimate low. So now we're moved down here to the ultimate low. This is our current ultimate low. We come back and we're in the midst of flagging like this. Now we've gotten above it briefly right here, and we've got right here at our flagging low. We do not want to see silver break below this low. So we do not want to see, got to get rid of those, silver get down below this low, 29.75. Let me draw a line instead of that. And what we do want is we want to see silver rally back up and try to take out this high. So there's our breakaway high. I'll carry this out a little bit. This would indicate a move to the upside very consistently, rolling up, trying to find our sideways consolidation phase. A move down here would indicate that we are going to continue to see a deeper low, a new deep ultimate low pattern, which would ultimately move this down to somewhere over here. So right now, this is our ultimate low. And again, this is Fibonacci, again, taking out new price highs and new price lows. So again, the excess phase peak pattern plays right into Fibonacci. I can come down here, squeeze this show you very cleanly that as we move up and we establish standout highs and lows, you can see them here, you can see it here, you can see it here. There's another one right here. And as we're rolling, okay, we have this as our ultimate high. That is our ultimate high, the highest high that we've seen in the last 45 to 55 bars. Then we can come in here secondarily, draw another highest high right here. So this takes over as our ultimate high from this one. And again, I'm giving you guys a quick little lesson on Fibonacci. But as they were moving up here, we get these as standout lows, okay, because they've been reached within the last 15 or so, 10 to 15 bars. Normally, I like to say about 15 bars, 15 to 20. This would be a standout bar because it has been touched within the last 15 bars. And I just look at the low and go back about 15 bars and see if prices actually touch that level. Now, when we get over here, this now becomes what's called a unique low. Okay. And this is a unique low because, again, because it has not been touched in the last 15 to 20 bars. And this becomes a unique low because it has not been touched in the last 15 to 20 bars. And this becomes a unique low because it has not been touched in the last 15 or 20 bars. So as we're coming up and we establish this high, I'll mark this as green, and this high, these become the ultimate levels that we have to breach in order to try to get into a true bullish trend. We cannot get above this level on a rally, then we're in a downtrend. It's just the way it is. Why? Because we've moved into this downtrend here off of this breakdown. That has set up a new downtrend on the intermediate term, and we are looking for it to break below lows, which at this point right here, it does break below lows right there. We've broken below standout lows and unique lows. So this now sets up a very deep trigger to the downside. We are now in bearish trending in silver. Now we needed to move back up here. This rolling here of these upper highs. So now remember, we have a standout high right here. I'll mark this as light green. We have a standout high right here. Might be a unique. I'll have to check. Looks like a standout. And then we have a second standout high here. We have a little standout high right over here. We have another little standout high right here. Then we have a standout high here. Actually, that's a unique. I'll mark that as a darker color because it hasn't been seen that price in 15 to 20 bars. Whereas I think this is going to meet that 15 to 20 bar ratio right back over here. So at this point, we move into that high mode where we are starting to see counter trending. So this is really upward trending in this area when we start to break out into that flag. And this is downward trending right here, intermediate term, downward trending because we've broken these lows coming down. So Fibonacci is the concept of being able to identify these up or down trends very cleanly. Now, we come back over here and you can see that we reach the peak. We start to look for what are called standout lows again. So here's a standout low coming across, got to make it red. Here's a standout low coming across, got to make it red. Standout lows happen where the previous price has touched this level within the last 15 to 20 bars. And again, that 15 to 20 bars is arbitrary because it is actually teaching you to consider time. So this is a 1 hour chart. So this is 15 to 20 hours. The reason I use 15 to 20 bars is because it gives you a pretty good reference of how much time it takes for price to roll around. So you can see as we fail to establish new highs, and that really boils down to the old saying that Fibonacci teaches us these things. A, price must always attempt to make new higher highs or lower lows at all times. There is no concept of price ever doing anything than trying to make new higher highs or new lower lows. B, price only operates in trending or flagging modes while operating in the A construct, always trying to reach new higher highs or lower lows. So remember, it's always doing A, but it can operate in trending or flagging mode. Okay. And hypothetically, lastly, C, price may fail to continue reaching new higher highs or lower lows, resulting in a change of direction. So again, when you think of these concepts, prices moving down establishes a new lower low point, comes back up, fails to break the new higher high. Same thing here, comes back up, and let's drag this over and really spread this so you can see. Price comes up, rallies up to this higher high, rejects, comes back up, fails to establish a new higher high. Okay, fails to establish a new higher high. That means that price must either establish a new higher high or it's going to roll down and establish a new lower low. Here we have a nice little standout low right here coming right across. And as soon as price breaks down below that low, we know that we're basically in trending. There's our first trending trigger. Now, until we get, and each time we break down below these lows, here's another standout low right here. And here's another standout low right here. So each time we get these breakdowns, we're actually looking at price failing to establish this new higher high. It was unable to get above this green level and then turned around, started breaking down through these lower lows. This tells us that we're in a downtrend. Okay, very cleanly, Fibonacci tells us that we're in a downtrend. Then, as we come down here and we touch this level, that's our, let's call it, unique low. It's not our ultimate low because it hasn't been the lowest low that we've had in the last 45 bars. I go back over here and I can tell you that this is roughly within 45 bars. So the general rule for standout lows equals or highs equals no price breach within 15 to 20 bars. So understand that what I'm really telling you there, guys, is that we want to look for a low that has not been touched recently. Unique, UNIQUE, highs or lows, is within the last, let's call it 30 to 45, let's call it 35 to 45 bars, okay? And then ultimate highs or lows are basically within the last, and I don't want to mislead you. So let's call this 30 to 30, 30 to 40. And again, you can adjust these like I'm doing. And then here, well, let's just call this 45 to 55 bars. So the idea here is that ultimate highs and lows need to be very unique. You cannot, like, this is an ultimate high or low because it hasn't been touched all the way back hourly. So you can look at this and you can say everywhere up here. Now, a high or a low's got to be a peak like this. So this is a peak. This is a peak. This is a peak. This is a peak. All of those constitute a fractal peak. And a fractal peak basically is this, okay? And then this type of price move. Let me do it as a line. This type of price move, and then higher, and then a peak, and then lower, and then lower. This is a fractal. And what you're getting here, guys, is this peak formation. Okay, that is what we're kind of looking for. At least 1 or 2 bars lower on the left and at least 2 bars lower on the right. So when you get double tops where it can happen, you get the exact same top, you can count those essentially. And a double topping formation would be like this, where drag this 1 bar over and then duplicate this. And this would be our double topping. I'm trying to get that exact, but really I'm trying to get this just to show an equal top right across here. That's called a double topping pattern. It's called tweezer tops in Japanese candlestick terms, and that is still a peak. Okay, that still constitutes a peak. A trough is the inverse, is nothing more than flip this upside down and you get the inverse. That's a trough or a bottom. So ultimate highs or lows. This is an ultimate high. This is a high price peak. This is a low price bottom. So here you have the lows. Here you have a low. 1, 2, don't count, don't count. So you see in an uptrend, we get very few lows. Here's a low, here's a low, here's a low, here's a low. So you can see them. They're very clean. Here's another one, stands out very clear, very clear. Here's another one, very clear. Here's another one. Here's another one. I mean, they happen everywhere. So what you want to remember is you're starting to look at these, you want to remember that Fibonacci tells us everything. So now we come back over here to where we're at right now. Look, we come down here. This is our ultimate low. This is the lowest low we've seen in forever. Okay, so not forever, but a long time. Now we're going to come in here. We're going to pick apart this chart. So we come back up and we start looking for the breakouts. Here's a breakout to the upside. I'll make this kind of a light blue color. These are standout highs coming across here. Standout high coming across here. Standout high. Actually, this is more of a unique high coming across here. I'll make this a different color. Unique high because it hasn't been touched in 30, 35 bars. I go way back over here and say, okay, yeah, that's been touched. So understand that we're really looking for about 25 to 35 bars roughly. It hasn't been touched. Whereas on a standout, we're looking to go back 10, 15 bars, maybe 20, and it's been touched. So at this point, price has not been touched all the way back to here. This is a unique high. Okay. This is an ultimate low. Why? Because price has not been touched for at least 45 plus bars. Okay. That is a unique low. Ultimate low. So now we come in here we've seen this rally up. Now let's start looking for our standout lows. So we get a standout low here, make it red. And we get a standout low right over here, make it red. And we get a standout low right over here, hasn't been touched yet. And we get almost a couple, you can call it a standout low. I'm not going to. I will call this a standout low because it is a clean standout low. And we're setting up kind of the end of a day rotation right over here. So now I get rid of some of these lines and show you what we're looking at is this flagging formation, most recently getting above this level, which is good. This is indicating that we've got a bullish trend setting up right there. And we have rolled through these standout lows, through this standout high, rolling across this level. We have now set up new standout highs right here, which will be blue. And what we're looking at, guys, oops, I got to roll here. I got to go pick up my son from work. What we're looking at here is this consolidation range. So this level has been breached, okay? This level has been breached. This is the levels that we're working with right now for gold and silver. In this case, silver. We're working with 30.89. And we are working with 30.30. Lowest level, 29.75, would be our major breakdown level. And this upper level here, 31.25 roughly, would indicate that we are breaking to the upside. We are breaking that unique low or unique high to the upside. So these are the levels we want to watch. This is where we're trailing within this range. We are consolidating. A breakdown below this level would indicate that we are moving back to the downside. A break away above this 30.89 would mean that we are continuing to trend higher until potentially we set up some sort of a new high over here. Remember, we could set up any number of new highs in this area. We just don't know where they are yet. We are clearly in bullish trending at the moment because the most recent breakaway is here. We have yet, well, actually here we have now we're in bearish pullback mode. I missed this. This gives us, actually, I mean, the lows are broken, but the close hasn't. And that's something I look for. So I'll mark this as moderate downward trending, not really aggressive yet. Potentially trying to hold above this kind of low level here. But we need to see this roll. We want to see this roll up out of this level into our consolidation period up here somewhere and then roll higher. And that's kind of what we're looking at, guys. We want to see this roll higher in metals. That's ultimately where we're going to be with this. So we need to, again, watch this level. This is critical on the downside, and this is critical on the upside. So those are the levels that are most important when you put all of this together. When you put Fibonacci and you really understand what's going on price-wise, when you put the excess phase peak pattern into play and you put Fibonacci into play, this is what you end up with. This is this type of detail of analysis, and you can see what's going on. So, I mean, where would I be right now? I would be patiently waiting. If I really wanted to get into some kind of a deep, type of a trigger, I would be possibly trying to buy down into this area, basically saying, look, I will take my chances on a deep washout low rotation here if it happens. If not, I'm really looking to try to buy up in this area on some sort of a breakout, 31.12 roughly. So it gives you an idea of how you can set up and move into our expectations. Now, why did I draw this here? Why did I draw this consolidation pattern here? Pretty simple, guys. Okay, it matches right across this level. And then it would break away even higher if it breaks to the upside. Okay, I am 8 minutes late to get my son. Should be no problem. I will talk to you guys later. Happy Friday. And remember, now we get to do all the weekend research, figure out what comes next. Talk to you guys later.